Hi, this is RN Bhaskar from Bhaskar Ki Business Baatein. And as I promised you last time, we shall periodically come to conversations. And I'm delighted to bring to this interview table once again Abizer Diwanji, who's well known in the financial circles and is with NeoStrat advisors today.
Thank you.
Abizer talked about the distress in the farming sector last time and what role finance could play and policy could play in the sector. This time we are going to look at another sector where there's a crisis and is crucial to the country, the MSME sector, the micro and small enterprises sector. There is a need to revive the sector. Why? How? What can be done is something I will listen to the expert because I too need to understand how the sector works. Abizer, over to you. I'm all ears.
Much obliged to be back on your channel.
Pleasure.
Bhaskar, let me just say, MSME, when you look at it, stands for micro, small, and medium enterprise. So 3 categories.
Yes.
Micro is, which has an investment of 1 crore or less.
Okay.
And has a turnover of 5 crores.
Okay.
Small enterprise is an investment of 10 crores and a turnover of 50 crores, up to 50 crores. And medium is 20 crores and going up to 100 crores of turnover, 20 crores of investment. So this is how it has been classified by the government. And there was a UK Sena committee report that happened around what is required in the MSME, a very, very good report. I think the government is seized with the problem that we have a 92 lakh crore credit gap.
92 lakh crore.
It's a massive credit gap in the MSME credit business.
Okay.
Which is not filled for various reasons. I'll get to that, and pretty legitimate reasons not to be filled that. And the other problem that we have is that these SMEs are so small sometimes that the entrepreneurial skill of the Indian, which employs 11 crore people in the sector, is not utilized appropriately because of the fact that there is not enough financing available and not enough enterprise that can bloom.
Okay. What is the contribution to India's GDP?
30%.
30%, that's a whopping large number.
Exactly. Obviously, you have to understand a lot of MSMEs have increased over time simply because if job creation has not happened, people have started setting up micro enterprises. So that is one reason. So it's not the only cause. It's a reason. But if you look at the sector, and frankly, that's encouraged. If more and more people want to come into the micro segment, be entrepreneurial, it's welcome to be entrepreneurial. Question is, how do you get scale? Now, India grows only when there is significant scale.
Yes.
You can't have just 80 listed companies getting all the capital market exposures when the rest of the companies are not coming. So government has done a few really good things. So the Bombay Stock Exchange, and now the NSE also, has set up something called a MSME Exchange, which is where MSMEs of a particular size can access capital markets. It's a very good thing. So capital has been made available.
Yes.
Also, what it forces these MSMEs to do is to come out with more disclosures because the disclosure requirements of SEBI apply to them.
Yes.
As you do more and more disclosures, the MSME becomes that much more transparent. As it becomes more transparent, its ability to avail credit is higher.
Avail credit, avail investment, both.
Credit investment, both. Then there is, of course, GST, which has played a big role. And the whole digital public infrastructure. That cannot be undermined. So, for example, look at a small chaiwala today. And you just ordered chai from me. There's a chaiwala. That chaiwala is now on UPI. And UPI means his income is legitimately tracked. What he's getting away from is the fear that if his system is in his bank account, if his cash is in his bank account, he's get taxed. He's way below the tax limits anyway, it doesn't matter. But that fear always existed. So I think what UPI has also done has bellied the fear that everything which is recorded formally in the system is in somebody's public eye. It is not. Because if you're below the tax limits, frankly, nobody cares.
Nobody cares, yes.
So now what is really required and where the issue is that these people have a lot of information asymmetry. One is asymmetry on government schemes. The schemes are not well publicized to the people.
People at the ground level don't know that these schemes exist.
Secondly, their own information asymmetry to their stakeholders is not appropriate.
Explain that.
So what do they tell their bankers?
Ha.
They don't show them the right balance sheet because
They
the balance
don't have
sheet
the cash
isn't
flow in the
there.
bank, yeah.
The balance sheet isn't there.
Yes.
So the balance sheet is a commingle between their personal income and expenditure and their business income and expenditure. It's very difficult to segregate the two, and thinking is required as to how the two can be segregated so that the profitability of a business can be assessed appropriately by a banker. And I would not fault a banker for not assessing that well. So there's a journey to this, and the journey, in my opinion, so there is obviously, again, the priority sector norms are there. You have to lend to MSME sector, and there's a forced lending directed to that particular sector. Clearly, our banks are not experts at doing that. Clearly, they're not.
Clearly.
Because the balance sheets are large. Imagine a State Bank of India trying to give somebody a 10 lakh loan. The focus isn't there. SBI is
It could be even smaller, 50,000. They won't give it.
They can't give it. And,
So
and I don't think they have the ability to assess.
In other words, you need intermediaries between the banks and the MSME.
So what the system has done, and the banking system has done it over time, or the RBI has done it over time, has set up a nice ecosystem. What's the ecosystem? The large banks, small finance banks, which are primarily lending to the PSL or the priority sector lending sector. Then there is the NBFCs, and then there is the microfinance companies.
Yes.
So for the micro, small, and medium enterprise, we have every level. Then there's a cooperative sector which I'm not touching right now, because that's a bit tainted
That's a
in terms of
different one,
governance. Let's not talk about the governance of that. But if you look at this particular structure, which is controlled by the RBI, we have the ability to strategize who will give credit to whom. And if you're able to manage that well, I think the proximity that a microfinance gets to its customer, a large bank cannot get.
Very true. But the trouble is the government comes up with rules saying the microfinance company cannot charge a higher interest.
So that's a journey. So that's a different question. So I think let's I won't fault the government completely. I'd put it two ways. Is there usury being charged to people who don't otherwise get credit, or their only source of credit is the money lender? Of course there is. There is. But let's understand, and I'll explain the basics of finance to you, and that's important. Whenever you source small ticket credit, there is a cost of sourcing that credit.
Yes.
And because of the lack of information, formal information available, there is a high cost of devolvement.
So the risk factor increases.
So the risk factor increases and the cost of credit increases. So we have to factor both these when determining interest rates. So now, in my view,
now that makes sense. Yes.
So there is a journey that everybody needs to go through. So let's take a very extreme example. Somebody who's a micro institution, he wants to avail of bank credit. He's not going to get 12% bank credit tomorrow. He will have to go through an NBFC or some other riskier lender
who knows how to evaluate risk and manage risk.
Yes, so he will have his surrogate ways of evolving credit, which today a large bank does not have. There's a skill gap. Can the large bank have it? They can build it. Do they want to build it, or should they build it? In my opinion, they should not. So what they should do is they should get this surrogate credit evaluator to factor in the cost of credit and give him the credit. Now the surrogate evaluator is also evolving. When you talk digital lending, for example, they give it based on surrogate information. That's an evolving process. I don't have all your documents today. I have some of your documents today. Okay. So I'll be able to assess your credit risk to some extent. And for the balance, I will charge you. So the cost of interest
goes up for the thing that you can't evaluate.
But as you submit more and more, get more and more transparent in the system, more and more of the information asymmetry to the bank or to the lender reduces, your cost of credit will reduce.
Absolutely.
Then you will become so low that you can actually go directly to a bank. You don't need these intermediaries in between
anymore, but you have to reach there.
So that is how you will bridge the gap on the cost of funding. The other thing is the cost of lending itself. Now, if you are sitting in a remote village in India, in Andhra Pradesh, for example, the ability of an SBI to open a branch there and lend to a small book, the cost of having the branch, the cost of having the employee there is too high.
Very true.
So that's where there is certain levels of lending which will remain with the micro and the NBFC sector, and it should remain with them. So as the system evolves, you will find that people move up the credit chain, correct? The other way to do it is to deliver credit to these microfinance and these NBFCs from the banking system. Now, what are we facing today? We are facing today a situation where banks are reluctant to lend money to NBFCs or to microfinance institutions. Correct? Why are they reluctant? Oh, there's too much of risk. They take too much of risk. Yes. As long as the bank believes that they have the ability to price that risk, and there's a capital buffer. NBFCs and microfinance companies have to maintain a 15% capital adequacy. So there's a 15% buffer to everything.
Correct.
Which is the capital of that bank, of that NBFC. So the bank should then lend cheaper into the NBFC, let the NBFC earn the spread which covers the credit cost.
Very true.
And as the customer gets evolved, so the Rome wasn't built in a day. What will happen is somebody who was borrowing at 40% per annum will come down to 24% per annum, will come down to 18% per annum, will come down to 12% per annum.
It's
a journey will take time.
So the 40% that you used to pay to the money lender,
will go away.
Which was usurious.
Yes.
Now you go to an NBFC, will charge him 24%, which some people may say is too high, but the risk is also there.
Exactly. And as the perceived risk reduces, and that person will also have more options to go to other NBFCs. Mind you, the market will make sure that he's right priced.
Competitive, yes.
He's right priced.
Yes.
And the right pricing will keep move up the chain. But there are two aspects of it, as I've just said. One is the pricing by the NBFC. Let it happen and let a customer evolve. Second is the cost of fund into that NBFC or microfinance company.
also to be reduced.
So make that, so lending to those NBFCs and microfinance companies, if they are made part of a bank's priority sector lending, then the banks can simply lend to them and let them lend onwards.
Correct.
Rather than saying, I want to lend directly to that particular customer. Or I want to
Which will be stupid, it will push up the cost of the banks prohibitively high.
Exactly. And the banks will be more than happy to give money where the credit risk as well as the cost of giving that credit lies with that NBFC.
Excellent. Effectively, the banks have to make sure that NBFCs can get the money at lower prices, and the MSME in turn get the money at lower prices than what they would have paid to the money lender.
What we are worried about in this whole system, and rightly so, RBI has seen too many NBFC defaults and too many governance issues in NBFCs. And obviously, while RBI has come out with a framework of governance which says large NBFCs will be governed differently from small NBFCs, small NBFCs are more light touch. That's how it has to be, because the delivery of credit to the underserved today has to be light touch, because if it is not light touch, they will run away from that credit.
Yes.
So I will give you another example.
Yes.
There was a gold finance company in Tamil Nadu.
Okay.
And there is a large public sector bank sitting in Tamil Nadu which lends at 600 basis points or 6% lower than that NBFC. Yet everybody is thronged to that NBFC and not to the bank. Guess why?
He gives loans faster.
Yes. So as one of the customers told us, if I have a gold to pawn and if I go to a NBFC, I come back with the cash. If I go to a bank, I come back with an application form.
Brilliant. That's a very good differentiation. Brilliant.
So what has to happen is, and it's the DNA of the bank and the DNA of the NBFC, one has to respect
has to do what it has to do. Yes.
One has to respect that. So really, there is layers of credit and causes for horses. The right kind of people will deliver the right credit, and we need to respect that. Once that respect comes in, the good governance NBFCs or microfinance companies will continue to get bank credit. And if the line of bank credit is uninterrupted, the ultimate credit delivery to the SME or the MSME will also be uninterrupted. And that is the cycle we need to go through. RBI is doing their inspections. Banks do their own assessment of NBFCs. They know the men from the boys, and they know whom to lend and whom not to lend. So let them take that call. It will be a commercial call that they can take. They are taking a commercial call on any large credit. It's like, another example I keep giving every time is like, banking has to go through the UNILization.
Yes.
What is UNILization? I am sitting in a small part of a village. I want to buy a soap. I will not be served directly by Unilever. I will be served by a kirana shop.
Kirana wala.
That kirana shop knows me so well that without a question, he will give me credit. I will spend more than I have, but I know that I'm going to get that money. Or the kirana shop also knows I'm going to get the money at the end of the month, so there is no harm giving him the credit.
The kirana knows how to assess the risk worthiness of each individual.
Exactly, which a bank does not.
Correct.
Or in his case, Unilever does not. So Unilever operates through a system. In our banking over time, we've had the system now of wholesalers and retail shops and kiranas, and we have this whole setup that like an FMCG has, which is large banks, medium banks, NBFCs, microfinance companies, everything else. So we have that. Why don't we follow that structure and push the credit down that way? So if we do the Unileverization of Indian banking,
Excellent.
penetration will be better.
This is good. It's an eye-opener for me. And it explains what needs to be done and what policies need to be brought into place and how to reduce risk for the MSMEs. But thank you, Abizer. I think I'm going to attend your classes more often. But thanks.
Thanks. Our pleasure, as always.
Pleasure to have you and explain things to me
I say that,
and to the audience.
I say that while most people are hopeful, I am confident. Thank you.
Wow. Thank you. Thank you very much.